Let's have a look at some business news now. First Republic Bank was one of the victims of the US bank panic that gripped markets in March. It's back in the news with dismal figures for the first quarter of the year. Deposits dropped by 40%, but the bleeding has since stopped and withdrawals have leveled out. Now total deposits stand at $102 billion. That's almost what they were in March last year. Bank officials on an earnings call have expressed appreciation for the $30 billion pumped into the regional bank by America's largest financial institutions. That was a deal brokered by the federal government, those big banks willing to spend big to avoid a wider crisis in the sector. Let's go to Rochester in England and speak to Francis Coppola, who's a financial economist. Francis, thank you for your time. Is this the end of the matter, do you think?
No, I don't think it is. I mean, I was looking at First Republic's results today, and it doesn't look strong to me. I think the regulator's going to have to do something. I'm expecting that at some point, First Republic will find itself a buyer or be broken up, because it doesn't look viable to me. It's still, even after the injection from the Wall Street banks, it's still about 70 billion down on deposits, and that it's not going to recover from that.
So we've had a few months of central banks around the world raising interest rates. Probably the Fed, we believe, will start to reduce them, drop them as the year progresses. What will that cheaper money mean?
Well, for banks, it's two things really. On the one hand, sound banks have been able to profit a bit from rising interest rates because they've been able to raise rates to lenders rather faster than they've raised them to depositors, and therefore they've seen widening net interest margin, and that means more net income for them. But banks that are not so sound have had problems with their capitalization, really, arising from this because the value of the securities they've been holding on their books has fallen, and that they've taken a capital hit because of that. And that's partly what's happened to First Republic Bank, actually. So it rather depends on the bank. For the rest of us, I think the Federal Reserve dropping interest rates might be a good thing, simply, or at least stopping raising them might be a good thing, because there are signs that the US economy is starting to experience a credit crunch where banks pull back on lending, and that's quite bad news for an economy, because lending enables small businesses and households to get hold of the finance they need when they need it, and when that dries up, then the whole economy tends to slow down quite a bit.